for all those other things to pop up. But anyways, in here. Yeah, and Rob says, plus you can trade it, but that's what I'm saying. Like, it's so much better. And then you got to time that with everyone else's economy. You know, if you have your own economy, you kind of have to think about your neighbor's economy, your hood's economy, your city's economy, your state's economy, right? You don't want to mistime everything, because how do they say it? A lowering tide? It doesn't sound right. A dropping tide? A declining tide lowers all ships, and then there's nothing underneath you, right? Kind of stuff. And that's when you should be, you know, a falling tide, I guess. So anyways, enough about me. Let's get into you guys. All right. So today is Thursday, June 21st, 2018. This is your daily Forex trading strategy session brought to you by TradersWay.com. Let me remind you that trading is not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay. Thank you very much, namaste, for being here. Do these sessions 7:30 in the morning, Monday through Friday, with the overriding goal of helping you put together trade plans throughout the New York trading session. But really, the long term, right? The big, hairy, audacious goal, the raison d'etre of doing these webinars, is really to help you succeed and thrive as an independent trader. I want my personal goal for you is that you can look at the charts, you can look at the fundamental data, you can come up with a bias, and you can put the bias into trade plans, and then actually be able to enter and exit the trades properly. You know, completely independent of me, completely independent of talking heads on television, completely independent of anyone that says they're an expert. I want you to filter what they're saying and go, you know what, some of that is good, I like that, but that other stuff, I ain't buying it, right? That's who I want you to be. And once you realize who you want to be that person. How do you say it? I'm trying to reference when Harry met, right? I want you to be that person as soon as possible, I guess is what I'm going. WTI. Should I start with WTI? Why not? Okay. The only head and shoulders, as you say, okay, is, I guess you're thinking like this. I don't agree with it, but that's all right. Shorter run. Oh, this gets interesting. A shorter run head and shoulders. Where the heck do you see that? You talking about this? So you're going to trade something I only see on an hourly chart? Okay. I have no idea what you're talking about. This? If it goes to 3, well, okay. All right. We got to deal with this, Joe. All right. First of all, all right, Joe. First thing, head and shoulders. A head and shoulders pattern is a reversal pattern. Okay. In this case, I'm struggling to see what you're seeing. So I think what you're looking at is I think that's what you're saying. Okay, this head and shoulders is a reversal pattern, and a reversal pattern of that nature should be a reversal of a bullish trend. But this isn't a bullish trend. Yeah, exactly. Yeah, it's complete nonsense. Right? All right. The trend is down. So you would look for an inverse head and shoulders if you thought that was a trend. Well, that one move, I don't know if I'd call that a trend. Okay. So you missed the big part. Yeah, well, you have to start on the high timer. Okay. So anyways, like, okay, so yeah, so you have a bullish sort of kind of maybe a head and shoulders pattern set up on a bearish move. So this is nonsense. You're making it up. Now it still might do some sort of price action that way, but that's not a head and shoulders pattern. All right. So anyways, if you were looking for a head and shoulders pattern, it would be like this. Okay. Okay. Because it's a reversal pattern this way. So what you're really trading so far, you mean I would probably have it more like this. And I have some orange lines there, so maybe I'm already doing that. Yeah, well, thanks for bringing it up. I mean, right now we can talk about it. But so if you were looking for a reversal of this downward move, maybe you could argue this. Okay. That's a better argument. I'm not saying it's right, but it's a better argument. Well, Brooke says, and there's divergence to it. See, all of these things don't matter at this point. So let's go back to before I click the record button, we were having a casual conversation, and I said, yeah, the key to trading is price action and pivot points. Okay? So pivot points are a form of support and resistance. It's for support and resistance of the market, and like price action, they can be predictive. You know where the support and resistance is before it happens. Well, if using price action, if it makes a lower low, I already know where I'm going to sell. Okay, it's already predicted. So if you see a head and shoulders pattern, or if you see any reversal pattern, or if you see divergence, or you see whatever you see, you have to see it at support and resistance. If you don't have the support and resistance first, it's nonsense. You can see the most beautiful reversal pattern. Okay? But if it's not preceded by a clear support and resistance, it's fool's gold. So you need to define that first. And that's why we start on the higher time frame. So you want to do a reversal pattern. And I start on the 4 hour, and you're like, no. It's not there. It's on a 1 hour. Well, if I don't see it on a 4 hour, it doesn't exist. Who's going to move the market? Those trading the higher time frames, right? The central bank or a multinational corporation, they're not watching your 15-minute chart. Okay? So anyways, so yeah, if you said, okay, let's build this together, right? If you said, all right, this bounced off of a perfect 618, okay? So we came down to the support pivot. If the support pivot holds, what's the projected target? If this holds true. What's the projected top? R1, which is up here. Cool. No, sorry, up here. Okay. If that's your low, your projected high is here. Cool. Okay. This dips down to a 618. I'm okay with that. I can still be a bull, right? It's okay. And notice that it was the target for that particular week. We only spent, what, a half a candle on that. So let's say it was down there for 1 or 2 hours out of the entire week and popped right back up. Well, good. So now, if we're going to set up a inverse head and shoulders, we need this area now to act as support this week. Am I correct? Okay. Shouldn't go any lower than that, or it's not a head and shoulders. So the next thing we need is a higher high, right? That's next week's target. Higher low, higher high. Okay? And that's how you put together an inverse head and shoulders pattern on an uptrend. Okay? What about a downtrend? Well, it's just a lower high. Okay? Yeah, my pleasure. Okay? Yeah, the worst thing to do is to start looking for patterns, right? The better thing to do is identify levels of support and resistance in which those patterns could exist. Okay? So we know, let's throw something else in there for context. This yellow area that I'm highlighting, what's important about this area? No, it's not resistance. Yeah, that's where bulls were supposed to buy it if there were bulls. So you might want to roll into these trades a little more on the cautious side. So if I were looking for some sort of head and shoulders pattern, I'd love to see it down here. Oops. Okay. So we probably won't get our target in June, right? We'd get our target in July. Okay. And currently July says, let me overlap, or let me redraw it using our pivot point analysis. What's actually being displayed here is if that does go down to here, July's top is only here. We're only going back to the monthly central. So we're only going back to, I can't see that, was it 68? Down to 62, up to 68. July is going to won't even get us to 70. So that's kind of how I look at it. So you need to decide which one. Do you think it's going to go up to 70 now? Or do we need all of July and some of August to get to 70? Well, that's just your analysis, right? I hope you're watching the OPEC meeting. But but it's a tough question, but that's the question that you should be asking yourself, and that's the question you should be doing, research on, right? Has anyone started to focus and refine their fundamental analysis of economic data? Has anyone decided to specialize in WTI and everything? You live and breathe WTI. Okay. Well, okay. Reading all the reports, looking at all the analysis, and you're trying to be like a portfolio manager. Oh, yeah. Oh, very nice, Keith. Very nice. I had it around here somewhere. Anyways. Yeah. Now, Guy, imagine reading that in like a week. Right? And yeah, nor am I. And then, Guy, just kind of to give you a sample, because that's ridiculous, right? It's 1,000 pages. I'm like, yeah, you have a week to read it, and by the time the week is over, you also need to write, let's say, an 8-page analysis of a particular question I hand you when you're done. That's cool, Brooke. Yeah. Yeah. And then, Guy, the week is over. Now what do you think happens? You hand in your paper, you've read those 1,000 pages. Now you read the other book. What is it? The prize and the prize and the, I don't even remember. Yeah, you read the other book, another 1,000 pages, and another paper. Yeah. So, anyways, it was a heck of a class. Let me tell you. Oh, did I tell you that they made a radical change to my cohort group at Harvard? I'm in the first group to ever do this executive program, right? And the second, there's a second cohort from year 2, right? The year after I started, and they changed all the work because it was too hard. And now in year 3, they basically canceled the program, right? They canceled the program because it's too hard. And I'm like, I love it. I love it when you have to shut it down because it's too ridiculously hard. I'm like, yeah, good. Glad I'm an A student. So they're making radical changes to my program and basically ending it. To give you an example, one of the classes I did last summer, it was a 3-week class. Well, it's a 16-week class I did in 3 weeks. Turns out it's too difficult for average people or average Harvard people. So they're making it a 7-week class now. I'm like, what? It's just too hard. It's too hard. Well, I got my A, so how funny though. My program's too hard. Not fair. I think I deserve an A. I love that it's too hard. Good. Good. Oh, for sure. It's crazy, right? Isn't it crazy? Yeah. On health says, yeah, if it's easy, everyone to do it. Yeah. It's funny. All right. What do you think? Should we sell it? No. Okay. The interesting thing is on Friday, if you were a bull, this was a buy on Friday. Okay. It only worked for, 30 hours, 36 hours. Yeah, well, Dad, did you sign up for summer school? Well, a break's not going to help you. Imagine like a concert pianist says, you know what, I just need to take a year off. That'll help me improve. No, you double down. You don't walk away from the table, you double down. You work twice as hard. When you think you cannot work any harder, you work twice as hard. So if you have not signed up for the summer school thing, that's what I would recommend. You watch 36 hours or whatever it is, maybe 40 hours. I don't even know how many hours it is. You should spend like 100 hours going through all the videos. Right? I think Brooke just said, watched all the price action videos. He took the price action course. He's turning it around. He's going to watch it again. That's the example. Yeah. Yeah, the way I look at it, guys, and the way I always looked at it is, imagine how awesome of a trader you're going to be in 2 years from now. Right? You and me working together every day for the next 2 years. Imagine how good you'll be 2 years from now compared to right this second. That's the guy you want to invest in, right? You want to make sure that person, that guy, or 2 or 3 years in the future has money. But let me tell you, sitting here and trading will not make you a better trader. Okay? You understand that? What's the flaw in the 10,000-hour rule? If you do something for 10,000 hours, you will become an expert. Right? What is the flaw? Yeah, you could waste 10,000 hours, right? So I totally who wrote that? Gladwell, right? Malcolm Gladwell, in one of his books, the 10,000-hour rule, is complete utter nonsense. Okay? Do you know anyone that golfs like once a week? Once, twice, 3 times a week? Maybe a retired person or something. I can think of my father. My father golfed over 100 times in 1 year. Okay? He is no better of a golfer. Even though he golfs 100 times a year for 20 years. Right? How many hours is that? He is no better of a golfer. Okay? There's a difference. Now, what if he spent half that time? I don't know how many hours that is. Only 50,000 hours, right? Right? He might have taken 100,000 hours worth of golf, right? So let's say you cut that in half, or cut that in a quarter. Let's just say it's 10% of all the time he's golfed. Let's say 10,000 hours now. He met with a coach, and for like 3, 4, 5 weeks straight, worked on very, very specific aspects of golf. Things like how to stand and aim properly, how to grip your club properly, the proper mechanics, the technical mechanics of a golf swing. You studied the math, you did the physics, right? You took a physics course to help you understand moment of impact and angle of attack and spin rates, and You knew how the ball was manufactured so it would fly through the air, right? And then you hit some golf balls. And, you know, you could hit straight, you can hit left, you can hit right, but you might spend months, if not years, just focusing on a driver or a 5-iron. How to hit a 5-iron low and then pops up high. How to hit a 5-iron higher and it comes in low. Shape it, left it, right, punch it, all these different things. You can golf entire rounds with nothing but a 5-iron. You tee off with a 5-iron, you hit your second shot, you even chip with a 5-iron. You even putt with a 5-iron, and you sleep in bed with your 5-iron, right? Until you've absolutely, completely mastered your 5-iron, right? You understand? Like putting, right? You could just create. What if you made thousands of putts a day? Like practiced, really, truly practiced. So in one of the videos in the training course, actually might not be up there. I did this video. It was famous for a few years. It was called OCO, Putt for Dough. Anyways, it comes to, I call these things putts, where I could make 10 pips, maybe 15. And I said, you should be able to make a 15-pip trade with your eyes closed, right? And the example, the reason I call it a putt is I read somewhere that Phil Mickelson, right? He would make 100 putts in a row, okay? Every single day, because of course he has a green out, you know, in his backyard. He has a golf course in his backyard. But anyways, he has this putting green in the backyard. And you might do this in the morning, you might do it in the evening, it doesn't matter. But every single day, he makes 100 putts in a row. And so he'll go out to the length that scares most people. That sort of 5 to 6 foot range. What if you were putting, and if you make the 6-foot putt, you win the major tournament, it goes on your record for the rest of your life, you get millions of dollars in endorsements, people treat you like a god, your name goes on the trophy. It's not just a regular tournament, it's a major tournament, right? You win the Masters. It's a huge deal, right? If you miss the 6-foot putt, you come second place and no one gives a damn. Your name's not on the trophy, you don't go in the history books, you don't get the endorsements, and you know, it's a big deal. You got to make the 6-foot putt. So every single day he makes these 6-foot putts. And he sets up and he makes the first one, the second one, the third one, fourth. So if he's on number 77 and he makes the putt and it lips out, he starts back over at 1. Yeah, he can have a bad day and have to make 1,000 6-foot putts. But let me tell you, when he is on the green to win the tournament, because he's so practiced and he's so confident, right? A competitor of his might say, I've been missing it right all day. Don't miss it right. Don't miss it right. I've been missing it right all day. What does that person do? Oh, I'm not going to make it. If I don't make this, I don't win. I've been missing it right all day. They miss it left. And they're talking themselves out of it. Don't miss it. I got to make this. This is the biggest putt of my life. I can't leave it short. I can't hit it right. I'm not going to make it. If I don't make it, I blow it. This is so important. This is millions of dollars on the line. Millions of people are watching. And you start sweating. Your heart starts pumping. And Phil might go up to that and say, I got this. I got this. It's in my kill zone. I can do this. I absolutely know I can do this. And there's a big difference, right? So, long story short, you can sit here for 10, 20, 30, 40, 50,000 hours, guys, sitting here playing Forex like a video game. You will not get any better. You will not have any consistency. You will not improve. You will not gain confidence. Because what do I say in the book, right? What does confidence come from? Consistency, or control, sorry. And control comes from consistency, right? And you can only have this control if you're practicing and doing very specific things. A golfer goes through a routine, right? A visual and mental routine before every drive, planning out the hole. Hit there, do this, come in for there, okay? They're not just winging it like amateurs do on the golf course, right? And trading is very similar. You have to break this down. If you're going to improve on trading, right? Like YJ was here last week, and Daniel will remember this from the old days, right? Where I had YJ do 100 1, 2, 3 patterns. The hammocks. So do 100 of them. You'll be patient because you'll be waiting for them. You'll get really good at spotting the right types of support and resistance for them to occur, right? Because you have to anticipate them before they happen. So you'll get really experienced at identifying the right levels of support resistance which they actually present themselves. You'll be patient because you'll be constantly setting these up and waiting for the proper setup. And then after actually trading them 100 times, you'll get really good at, when is the best time to enter, where's the best place to put your stop loss, when do you get out, all this kind of stuff. You'll be 100 times more experienced, but you'll also cut out all the loser, mediocre, crappy trades because of the first part of that process. So we're in a time period where maybe you saw it 150 times, and 50 times of it failed because of very good support or resistance, or it wasn't, or you got in late, or whatever it was, versus 100 really good setups. All of a sudden, your setups are so much better, and they're so much more likely to succeed. So you're so much more likely to make money versus lose money, and your confidence will skyrocket. Why? After doing all of that, your win ratio. 82% of the time you're not going to lose money. You'll at least break even, right? But you'll be confident because you basically, because you have that consistency, because you have control. That's where that confidence comes from. Because you've taken every little tiny bit of Forex and broke it down into the smallest piece. And I mean, are you holding your club right? Wayne, I just want to drive. Let's hit a bucket of balls. Boom! Look at this one go. I'm like, all right, you hit it far to the left. 8 times out of 10, that'd be in the rough. Right? So that sucks. Well, let's hit another one. Boom! Boom! Let's drive for show. Like, whoa, you're not even aiming properly, bro. Aim what? Right? You have to break trading into, I look at it, through a Newtonian physics kind of way. Not everyone does. I like the Newtonian physics of even the fundamentals. Right? But the way you stand when you go, important. Do you have balance? Think of Mr. Miyagi, right? What did he do? He made Daniel, right? He made him stand on a pillar, on a pier, right? So that you would have balance, right? And then you do the kick, right? And then you do the kick, and then what? Right? Wax on, wax off, right? And you got to have balance, right? You have to have balance. You have to grip the club properly. If you don't understand the physics of the ball or the physics of the way that your club was made, are you really a master of your domain? Right? So, I don't know. I've taken the analogy too far, but I'm pretty sure most professionals take it very serious. And I'm talking golfers now. Well, how about traders? Like I said yesterday, can you draw a MACD? No, Wayne, I can't do the MACD. Could you possibly be a master? You're using MACD. It's telling you there's divergence. What the hell does divergence mean? I don't know, I read it in a book, right? What does the math tell you? What does the algorithm do for you? What is it designed to do? What did Gerald Appel, when he looked at the moving average convergence divergence indicator, what did he ask it to do? Because someone did the math for him, right? You should know that if you're a master. What is your stochastics? What are these pivot points? What is a Fibonacci? Does it really matter if it's 618, not 66? I always laugh. It's a 382. Look, dude, look, let me show you, right? How about that? How about a 33%? How about a 50%? How about a 66%? Look, I'm a genius. Woo, that's so different than Fibonacci. See, I invented my own. These are Wayne fibs. Okay, like, right? Just what is the purpose? What are they really telling you? Does it really matter that there's a golden ratio? I don't think so. Just like, there's a little bit of a deal. There's a better deal. This is the best deal. Okay. But know what you're doing. Break it down. If you don't know all those pieces, like, let me give you another example. I heard back in the day you cannot trade the 1 minute chart. It was common knowledge. That's what everyone said. I said, I wonder if that's true. I spent a year trading the 1 minute chart exclusively. Did you know that? Do you think I learned something from only trading a 1 minute chart? I might have spent 10,000 hours trading a 1 minute chart. You know what I learned? It's worthless unless you know what's going on here. Yeah, Rob, no. Rob, what I did is I cleared my mind. I tried to walk in like just like a newbie, like just nothing, right? Remove all biases, remove everything. And that's hard. That's meditation actually is good for that kind of stuff, right? Because it's hard to erase what you know and all that kind of stuff. So I just said, that's a chart, trade it. Okay? And I did that for a year, and I got a lot of good stuff out of it. I got a lot of bad stuff out of it, and then I started asking questions like, what can I add to this that would help me? Okay? So the OCO, putt for dough, going back to that example, what I would do is I would use a 10 OCO, and like I would buy it off the support and make 10 pips. It'd be like Phil Mickelson making a 6-foot putt. I could do it with my eyes closed. Okay. Now I might make 10 pips and it goes 14 pips before the retracement. So I end up thinking of, well, on the long run though, after 100 trades, does it matter? Well, you say, well, that could be 300 pips. If I left 3 pips on every trade, that would be 300 pips. I'm like, yeah, well, yeah, so I don't know. So you start playing laws of averages and stuff. But yeah, but that's how I did it. So I'd throw in these 10-10 OCOs, or 15-15, and then 20-20, and then 25-25, and 33-33, and then 50-50. And all of a sudden I'm doing like 100, 300 OCOs. You're like, well, that's a swing trade. Yeah, you know. But it also, you know, a lot of that started with what I call putting. I'm not in it to make big money. It's an income scenario. So like this time of year, that's actually a great thing, right? So I'll throw down like the auto stop, for example, and I'll say, okay, I'm going to scalp for the next couple of hours. and I'm going to do 10 pip putts. I either lose 10 pips, right, or I make 10 pips. You know, and you're just like, well, that's only 10 pips, but, you know, if I do it this way, okay, on a given currency pair, any major, pound dollar, euro dollar, USD Swissy, how many pips do they move in a day? What's the average daily range, the ADR? Just roughly. Anyone want to throw down a number? Yeah, 80 to 100, James. I'd go with James. 75 to 100 pips. Okay? So, if I do a 25-25 OCO, that means it takes a 50 pip range, right? 25 pips for profit or 25 pips for loss. That's a 50 pip range. That's like at least 50% of the ADR. That's actually quite a bit. And 100, a 50-50 OCO, which to me is a spot trade, should, if you're wrong, should take you like almost a day to lose. If you lose 50 pips in a couple of hours, you got some serious problems as a trader that you need to address. It should take you all day to lose 50 pips. Have you ever got to that situation where you're like, I'm improving as a trader. It took me 2 days to lose what I typically lose in 1 day. Have you gotten to that point yet? Yeah. It's a great one. You're like, it took me 2 whole days to lose 100 pips. Yeah. Yeah. So anyways, but a 50, right? It should take you a long time to lose 50 pips, right? So anyways, going back to if you're just scalping and you're not in it for any fundamental reason at all, you're not in it for the carry, you're not in it for big money, right? You're in it for a putt. And sometimes I'll do this when I'm bored or if I'm scalping, or in the summer, right? If I did a 25-25 OCO, I'm basically trading either the top half of the day or the bottom half of the day, because it might only move 50 to 75 pips. The ranges are tight, right? So if I'm selling at London Open, I'm kind of predicting the top of the day. So in that case, I might do a 25-50 OCO. Because if I'm right, that's the top. So why would I only want 25 pips? Because I'm taking all that risk to predict the top. So then I need to get paid. You see what I mean? So in that case, I'm like, all right, it's 3 o'clock in the morning. I'm trading. I need to get paid for this pain. Yeah, except I think what they do with that, RJ, is that it happens like an hour or two after the London Open. I'm talking about having a plan before the London Open, right? So you take your shot, you need to get paid, right? Because if you're right, you did predict the top. Or let's say it's reverse. You buy it at the London Open. Well, then you need to get paid because you're predicting the bottom. I know, RJ, right? You see what I mean? And then New York, I mean, you can get, I've said this, by the way, for 15 years. You can get lucky in London, but New York is like a street fight. Right? So we don't know if that's going to be a top or a bottom, or, you know, both. So you might want to scalp. Okay. So going all the way back to that. Oh, new order. How do I turn the new or auto trading? Can't even see if I got that on there. Let's try to. Okay. So in this case, up here, this says I'm fully loaded. If I pull the trigger, it'll put a 10 pip stop and a 10 pip limit. Now what do I do? So I'm only trying to pick up 10 pips. Have you decided if you're a bull or a bear? That would be very helpful, wouldn't it? So I already have marked these out. I don't know if it was days ago, but I already have these things marked out. Okay. Okay. So here's the thing, Craig. You want to be a bear, but we just bounced off obvious support. Okay. But if you want to be a bear, I'm cool with that. Pick your lines. Okay. Okay. Anyone else a bear? Well, you can take a shot, right? You see, if I was a bull, I would have bought it down here. But if I'm a bear, now I'm waiting closer to the gray zone, the better, because that's my first level. Okay. And then you have to look at where 10 pips would put you. Ideally, 10 pips is above there. Okay. See how obvious this buy would have been, guys? If you were a bull, that would have been easy, right? So now you're scalping back into that. Okay. Would you have felt more confident maybe in here? Well, let me remind you, as a swing trader, you anticipated this as being a sell. You knew that, right? You knew that. You knew that here. You knew that on Friday, that probably Monday or Tuesday you're going to slam into the 4-hour 21 and you're going to dump it, right? All my swing traders know that, and they knew it a day and a half before it occurred. Oops. So that's kind of where I would say when you get near here, because remember you're anticipating the 4-hour 21 lags. So you're kind of up high, right? I seem to have a line here for some reason. Okay, so that's when you drop into a 1 minute or a 5 minute and you say, well, all right, if this rolls over here, I'm taking the shot. Okay, but it's not the 1 minute chart that's actually setting it up. It's the fact that you had a plan on Friday to say, yeah, well, Monday or Tuesday, I'm probably going to get a short and I know what the target is, and off you go. Okay. So now to look at this and say, all right, now I want to short again. Well, you're taking on a little more risk, right? But where is the good sell? Well, we're pretty close to it now, right? The cool thing about scalping is you can't lose a lot of money, right? So there's a stop there. There's a limit there. Okay, my trade's profitable. Oh, right on, John. Really glad to hear that. Yeah, there's all kinds of triggers there. There's a lower high, there's a 5A cross. I'm sure if you had an oscillator, there'd be one there. Hammer candle. I don't even know what a hammer candle is. Okay. But what I drew for you guys is you should be short up here. Okay. So it could even just be the touch. Oh, oh, that's no good. So that's 1 minute. So you just do that over and 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 over again. I try not to watch. Typically what I do is I change charts. I made the decision, I took the shot, and you leave it. So. No! Yeah, I'd rather be short here anyways. Oh my God. Oh my God. Good. Oh, look at that. What the hell is that? Anyway, so I just lost 10 pips. Huh? It took me 2 minutes to lose 10 pips. Not bad. Boom. Wait, I gotta get my drawing tool turned off here. Yeah, that's a heck of a move, huh? See, should have bought it. Wow, that's funny. Oops, I'd say that's probably a pretty good example of why you don't sell at double bottoms. Yeah, ooh la la ba. Well, why did it take so long? I looked at my clock and it was 8:34 or something. I'm like, was it a delayed trade? Yeah. The other thing is, how many times have you told me that you should sell at a double bottom? Yeah, Guy, that's another way of setting it up, which makes a ton of sense. Okay, but anyways, I don't like trading that low. So like I said, this is the better one take than selling at a double bottom. Let's just try to get an example. Maybe I gave you the best kind, the losing kind. Find your next line. If it's up here, you can scalp it up here. Okay. And if you're a bull, okay, you let it go, and then you're going to catch the next dip, right? Yeah, but I think you understand. I mean, I was forcing something. It was forced into a trade, right? I prefer buying at double bottoms and selling at double bottoms. And the reason for that is you don't know if it's going to reverse and go up off the double bottom, but you know bears are going to get out and maybe some bulls are going to get in. So it's going to do something, right? If it's a clear double bottom, and maybe we'll end on that. If it's like if we're talking about days and hours of doing this, okay, and then it does this, okay, and now it's doing this. Like on a 1 minute, it can do anything. But if we're talking about a 1 hour or 4 hour chart looks like that, what are the odds on a 4 hour chart someone's going to respect this dotted line? What are the odds that anyone that's sold here will take profit in this area? What are the odds? If this was a 4 hour chart. Because we don't know, but what kind of percentage are you thinking? 10, 20, 30, 40, 50, 60, 70, 80, 90, 100? Like if this was a big old, this was clearly a bottom, then that's clearly a lower high. It's predicting lower low, okay? But this might be 200 pips. Yeah, John says 75 or 80. Okay, cool. Right? They can take profit here, right? Which then, okay. Now, if bulls don't buy it, because we don't know if the bulls are going to buy it. They just can't. Okay? But if it goes this way, a new lower high, right? Now you can get in. Or lots of bulls buy it, and it's like this. So you don't really know. So maybe on the bigger time frame, you can take some profit here. What I'm getting to is on a 1 minute or a 5 minute, you can take this shot and you can pick up some pips, or you can just jam your stop, because it might go up there. Probably won't, but it might. Or you counter trend this simply because you know bears are going to get out, and you can pick up 10, 20, 30 pips, and then it collapses, and then you trade this way. And so often, right, what I tell people in the downtrend, I scalp up, right, and I swing down. So an example of that, okay, an example of that is if I was using that OCO, I might do, let's say, a 25-25 OCO up, right? And I might do, let's say, a 50-50 OCO down, or a 25-50 OCO down, or a 2500 OCO down, right? So, right? You see what I mean? But don't do that today. Don't do that today. Do that this year. Don't do it next year. Don't swing both ways like a broken gate, like that. You'll do yourself a disservice, because what you'll end up doing, if you lack strong conviction for a bias, you'll lose sight of whether you should be short-term short, long-term long, or long-term short, or short-term long. You'll lose sight of that, and your consistency will collapse. What I'd rather you to have is the patience, the discipline, and the consistency. So I'd rather you say, I'm a euro-dollar bear. And that's that. You're a bear today, tomorrow, this week, and this month. Okay? So that brings you the control and the consistency and the patience, because you find your hardcore resistance, right? And you sell there or you don't sell there. And you're just long-term short or short-term short. Okay? Okay? Make it a sense? And I guess one last thing to mention on that, while we're on the topic, is if you're on a chart and you've identified your levels of resistance, okay? And what I'm trying to tell you, so let me reinforce it again. If you're a bear, you're a bear, you're a bear, you're a bear. And you're scalping. I'm okay with that. What if all you did now, so I did this on a 1 hour chart, okay? I identified these levels as resistance. If you agree with these levels of resistance, then as a bear, you sell them, or you don't sell them, okay? And you use this 1 minute chart to measure the degree in which you are close to your price, right? So I would like for this to happen now. I'd like for it to go up to hit this number, and then I'm probably going to look to sell that fairly aggressively. How much money am I going to lose if I'm wrong? Whatever you set your OCO for. So what if you had a 25-25 OCO? and you have a maximum risk of 100 pips a day. What's the likelihood if you sold as a bear at resistance, you're going to lose 25 pips 4 times in a row? What's the likelihood? If you're a bear and you wait to sell at resistance, okay? Okay? And so now you have to find your way. Well, what about, can you lose 10 times in a row if you had a 10 pip OCO? So is it easier to lose 10 pips than 25 pips? Because both are fine. Like if you're only risking 100 pips a day, take the shots with the 10 pips as long as you're at resistance. And then you'll also have dry powder to add more when you're successful. And then you'll have to ask yourself, well, what if you took 2 trades this morning and you've lost 20 pips? You're negative 20 pips for the day. You can risk up to 100 pips. And then your third trade, you're up 40 pips. Well, you've lost 20, so now you're plus 20. Do you have 120 pips now in your budget for the day? Can you make additional trades? And then the interesting question is, what is your role today? If you made no money today, would it matter on your 3-year record, your 3-year track record? Probably not. And you're like, it's a rarity to lose 100 pips, but I bet you it's not a rarity to make 100 pips. So if you're on a hot streak, maybe you should continue trading. I think a lot of amateurs, they make their 100 pips and then they stop. They're like, I made 100 pips today and I don't want to give that up. I don't want to lose it. And they walk away like, I have made 100 pips today. Yeah, well, the market might have moved 400 pips, right? And then, of course, what does an amateur do? They lose 100 pips and they keep trading and they don't walk away. So you might want to train yourself and say, well, I can keep trading, right? And you're only making these little trades, but you're not losing a lot and you're staying in your trades. And then here's the third thing. What if you make all those little trades, but the OCO is not 10-10, it's 10-50? You can lose 80% of your trades and break even. But what if you have a good day and 80% of your trades end up making 50 pips because the market moved? I mean, we know the market often can just move and everything goes in one direction. Dollar's ripper strong today because of some reason, right? What's the chat? Now what? You have 8 trades up 50 pips. That's 400 pips minus the other 2 you lost. So you only have 380 pips for the day. But see, guys, you need to break this down. I would do it on spreadsheets and everything. Break it down. What works? What are your rules of engagement? Okay? Can I sell this here? Is that the right way of doing it? If not, then what does work for you? Should I wait for a 5A cross? Is that better than, all right, I'm going to lose another one here. Or is it better to use an oscillator? What works best for you? If you do an OCO, do you like a 10 pip stop, a 15 pip stop, a 20 pip stop, a 25 pip stop? What works best for you? Well, that means you need to try each one, 100 times? Which one? And track your stats. Which one over 100 trades? So you do 100 at 10, right, at 10 pip stop, 100 at 15 pip stop, 100 at 20, 125. You're like, Wayne, that's going to take me like 10,000 hours to do that kind of work. You see? Huh? But then you could say after 10,000 hours and 500 trades, you're like, Wayne, I use a 20 pip stop and a 50 pip limit, and I have a 72% win rate. I said, well, how do you know? Oh, well, I tracked it over the last 500 trades. Oh, you sound like an expert. How does that sound? Now, if you knew every time you triggered, 72% chance you're going to make money because you've tried everything else, you really know your rules of engagement, and you're really good at selling at resistance, you're really, really good at buying at support, and you just know under those circumstances, with your experience, you nail it all the time. So why? Well, because you're doing the same thing over and over and over again, so you do expect the same result. It's the people that, right, that lack the consistency that will lack confidence. If you are an expert and you know it, and you deserve being an expert because you've put 10,000 or 20,000 hours into selling at resistance, and you've looked at hundreds and hundreds and hundreds of your examples of how you trade, and you refine and refine and perfect and refine and perfect, and now through that intense study, you know 72% of the time the outcome is favorable for you? Are you a pretty confident trader? I think so. Yeah. That's where we're going to get to. Malcolm Gladwell says you should just focus on the 10,000 hours. You should just count hours. With all due respect, that's stupid. Okay? That is absolutely stupid. That's what someone who wants to sell books says. You can be an expert. All you have to do is count the hours and you'll be an expert. That is dumb. Absolutely ridiculous. There's a difference between wasting time and mastering your skill. I want you to master your skill. And then here's the cool thing. After your 10,000 hours is up and you've really, 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 really perfected this type of trading. Like I said, I did this, what you're looking at now, what I just explained, I did exclusively for 1 year. Okay? So imagine you get this down after a year of just perfecting this 1 hour presentation, right? You spend next year, or let's say 2020, you master a new thing. What if you just did this, practiced this one thing intensely until 2020, and then you focus on something else and you master that? That's the story of my life. That's what I have been doing for the last 15 years. Yeah, and that's what I'm saying. It's not a necessary for the condition, but at a bare minimum. Okay. How many Olympic athletes have put in less than 10,000 hours of practice? None. How many concert pianists have put in less than 10,000 hours of practice? None. How many Toyota mechanics have put in less than 10,000 hours working on R22 engines or something? None. It's like, why would you want to cut a corner? So I used to give a speech from now and then about falling in love with being in the plateau, enjoying being in the plateau. So put it this way, some people, they take karate lessons and they're like, great, great, good, good, good. When do I get my yellow belt? When do I get my brown belt? How long until I get my black belt? Am I a master yet? Can we speed this up? I want my black belt like now, like soon. What if I pay more money? Can I be a master now? Got it. By the way, I just made 10 pips. Okay? Right? Like, come on, can we speed this up? I want to be a master quicker. That person cannot be a master. It's the person that goes to the gym at 8 o'clock on a Saturday morning and stands in front of the mirror and says, this is so cool. I'm doing karate. I love the smell of the mats and the heavy bags. There's sort of a leather sweat kind of thing. And I can't believe it. And you enjoy it. And you're like, oh, gotta really get that fist just. Get that breathing. And you're there and you're focusing on letting your mind go the whole time, but at the same time concentrating on your breathing. And you spend that 1 hour that morning perfect the way you breathe, but you're so happy that you're doing karate and learning karate and being around karate and just being in the gym. You're like, that's the part. You're not skipping ahead. In fact, you're enjoying the process because that is karate. All right? I tell you that I enjoy the process of being a currency trader. There's a difference than trying to get as rich as I possibly can, as quickly as I possibly can. I'm like, well, you're skipping everything. Or like when I met that billionaire and he's like, well, some guy pitched me on this computer program that I can do the trading for you. I'm like, why would any successful trader want that? What, they don't enjoy trading? They're trying to bypass the analysis? They don't get excited by looking at charts? They don't enjoy reading analysis released by the central banks or IMF? Or like, what's wrong with that person? Why would you even talk to them? And he looked at me and I'm like, I love what I do. I'm not looking for ways to cut corners. Why would I do that? Then I wouldn't be a trader. Okay? Yes, so Mike's got it. Okay? So enjoy the process. Like I say, sit on the back deck with a Barron's magazine or an IMF report. Enjoy something that, reward yourself if you need to, but make it rewarding, right? And you're going to do your analysis. You're going to look at your charts. You're going to read the paper or report and enjoy a nice cigar and a cup of coffee and the birds are singing. And you're like, there's some loser at work right now that had to commute for 40 minutes through traffic surrounded by other losers. And they're all like a herd of losers. And they'll all go to their stupid jobs and work for their idiot boss, right? And then at the exact time, they'll all leave their building and they'll all find a trough together. And they'll stand in line at the burrito joint, eating $14 mediocre burritos, and they'll all trough at the same time between 11:45 and 1:50. They'll all trough together like cows. Burrito, and then they all get back and pretend they're doing their busy work together, and all that kind of stuff. And then what? And then they all go back down to their cars and commute another hour and a half back, surrounded by losers, and they all go to their loser grocery stores. Right? And like now they're all like, pork chops are 22 cents off per pound. I'm saving 22 cents per pound on pork chops. Yay! Right? And by 7 o'clock, the grocery store is empty because all the cows have stopped their stampedes. And they all what? Now what are they watching? Reality TV? Oh my God! This is life? Is that what people want? That's their success? They make $150,000 a year doing that? Oh my God. What a horrible, terrible existence. I'm going to go sit in the back deck. I'm going to read an IMF report. I'm going to smoke the cigar. And I have fabulous coffee from a coffee shop I ran into in Florida that does a fantastic job of their stuff. And they hand roasted their own stuff. I'm like, I got to have a pound or so of your coffee. And I bought some. I'm going to go up. I'm going to grind that. I'm going to brew some fresh coffee. I'm going to sit on my back deck. I'm going to listen to the birds. There's egrets out there. There's herons out there. There's hundreds of baby geese. And I'm going to sit on my back porch. I'm going to read an IMF report. I'm going to smoke the cigar. I'm going to drink fabulous coffee. And that'd be the rest of my morning. And that's me doing my job, by the way. If that sounds like I'm being arrogant, I'm not being arrogant. I'm trying to tell you, it's my job. This is what my job entails. I have to commute to the back deck, light up a cigar, and spend the next 3 hours reading. Oh, and if I want to go to the grocery store, I'll go to the grocery store. There's nobody there. I hate the grocery store. There's Amazon to deliver it. But do you see what I mean? Isn't that? I'm going to sit outside and enjoy life as a currency trader. I'm not going to try to speed it up. I'm not trying to cut corners. I am so lucky to be able to do what I do, and I know it. And I'm grateful for you being in my life to enjoy that process with me. I mean, it's really cool what we do. Yeah, it's trading or something. No, we're changing the world, right? And the way you change the world is you change your world first, and then you improve the life of the people around you, your family first, and then your friends. And then if you got too much money, you start donating your money, you start working with nonprofits, you start foundations. I have the McDonell Family Foundation, right? I've worked with nonprofits for 20 years. It's just, it all kind of fills in, and you'll look around and say, you know, this is pretty awesome. So thank you for being in my life. So I hope you take the opportunity to really focus your trading. Don't waste time. Don't waste 10,000 hours. Focus your 10,000 hours. Okay? Is that right, John? Yeah, 22 years of nonprofit experience. I ran a nonprofit with 3,000 people. That's how I was on the board of directors with George Soros. He was a director. Yeah. It's weird the things that happen, huh? So would you sell this? So, yeah. So anyways, fall in love with Forex. Just let go. And then once you fall in love with it, like drill down to something very, 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 very specific. And if I were me and I was advising myself, I would master price action and I would master pivot points so that I could day trade, I could swing trade, I can carry trade, okay? And the way I look at it is I scalp into my swing trades. So knowing how to do what I just showed you today is basically what I do on Fridays and Mondays to get into my weekly or monthly swing trades. To me, it's all the same after a while, right? When you're a master with your ninja sword, it doesn't matter if it's a watermelon or a pineapple. Coconuts might be problems, but yeah, cool. Well, I love you, babe, but I got to jump. It was real. I'll see you tomorrow. Today's a Thursday, right? So tomorrow's going to be our last day for a while. Yeah, right on, Tony. The tequila. Cool. So tomorrow's going to be our last day before, and then I'm off to Harvard University to work like a dirty dog. It's too hard for you. It's so amazing. It's too hard. I like it being too hard. That means if I get through it and I get an A, I freaking deserve it. Right? Oh, and I have full intentions of knocking this one down, a couple more A's. So I'll upload this. So I'm already missing you. Has everyone signed up for the summer course? I'm not even sure if the coupon is expired or not. John, I'm back in like middle of July. I don't know, about the 15th or 17th or something like that. Just shy of a month. That's why the summer school, I put that together. Yeah, sorry, Jim. Cool. As you. All right. Everyone is good. I'll upload this now. So peace on earth. May the pips be with you. May our profits be above average. Please visit TradersWay.com and open an account. And if you ever talk to the support guys, just say, hey, Wayne sent me here. I'm super happy. Keep these webinars going forever and ever and ever. I think it's cool. See you tomorrow.